Hi there. Okay, so video number 54, and this will be video number 16 of module 3. And in this module we're going to be talking about the RSI, the relative strength index. Okay. Alright, so go to your trading station, and assuming that you've got the templates on there, go ahead and choose the video 54 strategy 14 AC RSI indicator. Alright, as you'll notice, I have it on the 4-hour time frame, so switch to the 4-hour time frame as well. Okay. Now, as you may recall from module 2, the purpose of the RSI is really to let you know when there are overbought and oversold levels, but unfortunately with the RSI it lags a little bit. So there are some techniques that we can use if we were to use the RSI on its own, such as placing trend lines on the RSI and waiting for a breakout, or we could place a trend line at the point where it reads 50 down here, so I can right click that and just type 50 in the box. Alternatively, I can, if you've already sort of kind of said, well, hey Loz, you can also put that in the levels as well. Alright, so yes indeed I can put that in the levels and add a 50 into there as well if I want to do, just by clicking the add button and then typing 50 in there. If it goes away from you, then you can just, like, if I click on here, and then if you accidentally clicked away from it, you can double click in there again and you can type in 50 and then click on OK. Alright, I can move my little trend line tool out and there's the 50 properties in there. Alright, now the 50 level I use as a buy and sell trigger. Okay, so if the market is coming from below, or the RSI is coming from below the 50 line and then starts to break up higher, then that would be a trigger to go long. Conversely, you can see as it's gone up and now it's started to come back down and then it's broke this line, then I can get ready and prepare for a short. But these trades aren't always 100% perfect. So it's nice to have another indicator on the side to try and work out, you know, if the signal that you got from the RSI is going to match up with the other one to give you a nice strong signal to get in. Alrighty, so let's just move that out of the way, and let's just basically take a look. I've just taken the auto scroll off so I can freely do some back testing to try and find if any strategies that I find are actually worthy to take on. Alright, so the first thing I'm going to look at is this, obviously this trigger. Oops, I put it on the wrong side. Is this trigger that we're looking at to see where it actually breaks and goes below, and seeing what bar it actually falls on and what kind of candle that we're actually looking at, whether it's actually an up candle or a down candle. Okay, so we're on a bear candle, a down candle at the moment. Alright, we're on a another down candle, or down bar on the Accelerator oscillator. Alright, and it's the histogram is below the vertical scale, so that works. We can see the crossover here, and this works. Ideally, what you're going to need to be looking for is to wait for this first trigger to actually be confirmed, because the RSI has a lot of lagging tendencies to it. Alright, it takes a while to get where it needs to go, or where you might anticipate for it to go. It can easily pull back. So it's good to wait for another confirmation to get in. And hopefully this bar as well will read the same signals as this one, i.e. it's on a red candle, or it's on a down bar. Alright, it's on a bear bar, and plus the you know, the AC is actually showing a red down bar as well. And then the RSI line is actually below the 50 on that second bar. So that would look good for the time being. Then we need to sort of take a look at the area where we would have actually got in. So we want to be getting in on the end of that bar, or the close of this 4-hour bar, and we need a short trade, right? So we need to take a look over to our left to make sure that, you know, this area is a true resistance level. Alright, that's for a sell. Okay, that's not support, that's for a sell. Okay, so we need to look over the back to the left a little bit. So let's go ahead and scoot back to the left to see if this is actually a good signal to get in on. and we can see with a bit of congestion there, and it got supported by that support line. There's a bit here, didn't actually reach it, but it's close enough. And let's see how far back. Well, we're going back so quite far ways here, and we haven't even come up to our red line. Oh, there we are. Okay, so this one goes back as far as January this year, I believe. Or was that last year? Okay, that's 2010. So we've gone back quite far away, so that's good enough. So I'm happy with that trend line that we put in. Unfortunately, my oh, there it is. There we are. We'll go back again. I thought I missed my spot. Alright, so that could be a good place to go in for our sell. So let's go ahead and take a look at a buy opportunity and see if these two areas here, these two rules that we added, actually ring true for buy trades. Alright, so we're going to go ahead and take a look at the first instance when this buy signal comes in, then really wait for the second bar. That's on a green. That's on a green as well. Then we'll need to take a look where we will be getting in, and that'll be on that green bar. And I want to take a look at the differences as well at the position at where these lines that I'm drawing. I want to take a look at what position they are in its sequence. See, there's 1, 2, 3, 4, 5 bars have actually passed. This is the 4th bar of the AC oscillator, and this is the 5th bar of the AC oscillator. Okay, and then that one's the 6th and that one's the 7th. Now I want you to take a look. This is something else that kind of goes in my mind as well. You see that this bar here would be the next bar that we would go in and go long. Now obviously there's a bit of resistance here, so you may have not taken this trade, but it's all completely up to you. I mean, there's 100 pips there. Alright, we're on a 4-hour time frame, so that's completely up to you if you wanted to take that 100 pips, or minus 20% for margin of error. Okay, but what I'm looking at here is just these two particular lines, and I'm taking a look at this side, and you can see that this is bar 1, and this is bar 2, and this is bar 3. So this happened more or less right at the beginning of its histogram formation, and you can see that the market did come down pretty quickly after those, but this one seems to have dragged on a little bit before it decided to go up higher. So I'm wondering if that area there play a huge role on how fast are the profits accumulated after you've entered the trade based on this formula. Alright, so let's go ahead and take another look. Okay, let's take off this screen draw pen out and let's take a look at some other instances and where the market had actually crossed. Alright, we're really looking for the first 3 bars, so let's go and see if we can find a signal that actually appears within the first 3 bars and then take a look at the difference. I need to move that one over a little bit. Move that one over a little bit. Okay, so we would need to get in on the second bar, so it will be on the close of that bar and the beginning of the new one. Same rules apply as before. Are we on a support or a resistance line for this buy trade? We can see that there was a bit of an area here and there that got rejected, so this line does look like it's playing through true. We don't know about all this information on the right hand side yet. We're still over here. Only this information has been developed, so this area, and this area seem to ring true for a support level / resistance area. Then we need to take a look where the candles are right now when we get in onto that trade, and it's right here. So yeah, that would probably be a good buy trade. Alright, now the TP levels are going to be a little bit iffy. I really wouldn't know where to put. Well, my TP would actually be probably down here to the next support level rather than the next previous high, because the next support level are going to get hit a lot quicker than the next previous highs will. Alright, so I like to use that as a little bit of a guidance rule as well. Okay, alright, so that one does look okay. So it seems that the earlier that we get in on the signal when these bars are being developed, the better the outcome. But let's just keep on taking a look and seeing if it still does ring through true. I mean, this one here bit one more to the left. Okay, well this one's actually, that's okay right there. Either one, that one doesn't actually cross above the 50 line, but this one does, so that's good enough. And you can see that we're actually below the vertical scale here on the AC oscillator, so that's not going to be no good. And let's just take a look at this one. This actually happens on the green, but it's quite far away. Yes, in this particular instance it did go up pretty quickly and pretty fast. That's only because we had a huge downtrend. I would imagine that if this wasn't a huge downtrend and it had, like, you know, some retracement levels on it, like for instance if it came down here and then went back up again and down and back up, so it had a bit of a range inside it rather than just a huge drop, then we may have seen that this might have gone sideways a bit before it went back up. So let's just see if that did ring through true as well. Alright, see all these extra variables that I'm bringing in. Alright, so let's go back and see if we can find some more buy signals. Okay, here's another one. Can we squeeze that to the next? No. Okay, and then look at the next bar. Okay, so it's 4 bars here, and our entry price would be there. And well, okay, and this would kind of make me a little bit nervous. This does look a little bit, you know, look, we are right on a resistance level here because the currency prices seem to be above this line more than anything. And if we're sort of wanting to go long on this trade, we're basically entering in a risky area, really, to be honest. But we can use other, you know, methods that we've used in the past, you know, from one of these other strategies to see if these ring through true to go long on that trade. All right, but this particular one I would have actually ignored. Okay, I wouldn't have really risked that. Okay, let's take a look at this sell signal. That's on the second bar. Okay, here's one there. And the next bar we would have got in on this bar, so that looks good, and we could have targeted maybe like the next previous lows down here. This looks like a pretty strong support area, so that would have been okay. We've got in on the next bar for like 180 pips or so, which happens in like 32 hours. So yeah, there you have it. Alright, so there is another way that you can actually go ahead and interpret signals using the RSI without using any really technical fundamentals, you know, sort of with your technical analysis. Alright, I mean, like for instance, you don't need to go ahead and place like trend lines in like from here to here, okay, and then wait for a breakout, and then if that breakout kind of appears on a green candle, for instance, or on a green bar, you know, and if it's on a green candle as well, then go long. You know, there's all different kind of areas that you can you know, approach using the RSI, using with trend lines and stuff. But this is just, I mean, the strategy I've just shown you is without all the trend lines, but we're actually using the candles and the alignments to see if they actually line up. Alright, so give that a go. Again, there's your indicator template right down the bottom. Alright, play around with this one for about 2 to 3 days, and I will see you very soon in the next video. Alright, bye for now.